Good afternoon, everyone. Thank you for joining us. I think this is our first webinar of the year, if I'm not mistaken. I have John Singh with me, who's going to do the presentation, State of the Crypto in 2026. A short bio for John Singh. John Singh is a senior SAP Consultant at VMG Labs with over 20 years experience in software design and development. He currently serves as a Vice Chair of the IITPSA, Chair of the Remuneration Committee, and Chairperson of the IITPSA Blockchain Special Interest Groups, which is this session that we're in. In 2019, John founded the IITPSA Blockchain, driven by his passion for explaining blockchain technology in a clear and accessible way, empowering individuals like ourselves and organizations to make informed decisions and about its use. So we're very privileged, John, this afternoon. Over to you. Thank you very much.
Thank you, Calvin, for the very kind welcome, and good afternoon to all the viewers. I'm very happy to be here to present the state of crypto of 2026. So in the past year, we've seen a little bit of volatility in crypto, and that price action hasn't been, in the exponential kind of growth that we have expected from crypto. So in this presentation, we're going to talk a little bit about the global economic conditions that have affected crypto, and also political and others. The reason is that crypto has now become more mainstream and become institutionalized, with major financial institutions like BlackRock and Grayscale all becoming involved and starting crypto funds. So we're going to look at quite a bit of economics, some political events, and also some Bitcoin and other charts, and then go into what we expect for 2026. So the contents, so we're going to do, as said, we're going to do a lot of macroeconomic and chart analysis, a little bit of US policy, and then the crypto 26 outlook, and then at the end, maybe some time for questions and answers here. So we're going to first look at some major super cycle trends. So these are trends that are currently happening, and we expect them to continue for a number of years in the future. So the first is demographics, and this refers to the world population and age groups, and basically the age of the population across the world. The interesting thing here is the 65 and plus group of people. So this has been rapidly rising, and I think one of the challenges is that it's starting to catch up with the 15 to 24 and the 0 to 14 age groups. And if we look at this projection from the from this graph, we can see as the years go by into 2050 and above, it's going to start, the age 65 group is going to be larger than the 0 to 14 and 15 to 24. And what that means is that people are living longer, but then the birth rate is not as big as it was in the past. This has impact because obviously with the aging population, there is higher medical costs, and also they may be withdrawing from their pension funds, which has an impact on things like the stock market and property valuations, etc. So a very important group of people in the economy, and they will have a major impact as the years go by, because they will be affecting things like medical costs and the stock markets and those kinds of things. So, and it does have an impact on crypto, because this is the age group with the most amount of capital and money, and if they withdrawing funds to fund their retirement, then there's lesser money for crypto, for example. So it is a trend that could have impact now and in the future. And the next super cycle trend is the debt to GDP ratio. So this is the amount of debt that countries across the world are carrying now. So the worrying thing here is there's some major countries like Japan, the USA, etc., that whose debt exceeds their GDP growth rate. And I think the difficulty with that is that as your debt grows, the more and more of your GDP is being used to service that debt, and it's not so much about productivity in the economy anymore. It's more about that spiraling debt that the country has, and this has led to a number of factors. For example, in the USA, like the value of the dollar is constantly declining, and those kinds of things do affect confidence and also direct investment in the USA. So this is also a trend that's worth watching. I think in terms of crypto, it does help it in that when you have these debt to GDP problems, people see crypto as as a more stable way to grow capital over the long term rather than just keeping your money in cash. So it's probably good for crypto, but bad for the economies around the world having high debts. Yeah. Then artificial intelligence has also been a major trend in the last few years. There's been huge investment in data centers, chips, hardware, software platforms. So this particular graph shows that across the board, AI has grown tremendously in terms of earnings, up to 26% across the board. But at the same time, the valuation of those companies haven't kept up to those increase in earnings. So in reality, the valuations are pretty low. So that means these companies still have a way to grow, and they will be very prevalent in the next few years. If we compare that to other companies in the stock exchange, in the US stock exchange, you can see on the right here that their growth is much smaller, but the valuations are high, whereas in the AI side, your valuations are low, but your actual earnings growth is very high. So you can see that the cycle has a lot of legs still, and will be a major force in the years to come. We're going to next look at some macroeconomic indicators. So one of the important ones is CPI, or Consumer Price Index, and this is basically the cost of a basket of goods, and they're compared across over the years, and the items or categories are quite numerous, and things like energy, food, and electricity. At the moment, in the US, the CPI value is sitting around 2.6, around there, which is a little bit off the target that the government would like, but it's still relatively low. So when inflation goes up, that's when things get difficult, because people are spending more money on food and energy and less on investments like crypto. And so the impact is that it's during times of high inflation, they will spend money on necessities, and mostly that means the price of crypto may fall. However, crypto is also an effective hedge against inflation, and crypto can be used as a store of value that is not eroded by inflation. The next important economic indicator is M2 money supply. So this is the money in circulation, like notes and coins, but also bank deposits and money in that kind of financial area. So we can see that the supply has been growing over a number of years, and this is quite good for crypto, because it means there's liquidity in the system, and that there is a very high probability that some of that liquidity will go into crypto and keep its price going quite high. The US PMI ISM PMI is the Product Managers Index. So this is a measure of manufacturing activity in the USA. So with a value of over 50, it means the economy is doing really well. And then a value below 50 means the economy is not that great. So over the last few months, you can see the value has been below 50, but not by a great deal. So the economy is not doing great, but it's not in a recession as yet. So it's important to watch this, because with if the government feels that there is going to be a recession, it'll take measures like cutting the interest costs, etc., and also doing stimulation activities like buying more bonds and possibly printing money in order to stimulate the economy. So it's an important measure of the strength of the economy. And if it's doing badly and if it's going into a recession, then you can be sure that the government will take action to try and stimulate the economy again. So the yield curve is also an interesting indicator. So this is bond yield. So that's the bond yield rate. And many times people compare the 10-year, which is the long term, to the 2-year treasury bond yields. So it's 10-year minus 2-year. So if you find that the graph starts going below zero, it means that your 2-year interest rates are higher than your 10-year, the 10-year interest rates. And this happens when there is a sudden increase in interest rates in the short term. And this normally signals economic recession, because there's too much of tightening in the monetary policy. And when it's above zero, it means the economy is doing better. So at the moment, it is above zero, so it's not signaling any kind of recession. However, one of the concerning things is that these bond yields, the long-term bond yields, mustn't go too high. So when it starts hitting like the 6% mark, then it becomes a little bit of problematic for the economy, because what happens is that bonds are seen as safe, very safe investment. So if it starts getting to 6%, for example, people will just start putting their money into bonds instead of stock market or crypto. And also, when bond yields go up in the long term, their prices go down, and it causes a problem for banks, etc., that are holding a lot of bonds on their balance sheets. And so when it goes too high, it's also a problem as well. Yeah. So, but at the moment, it's very stable. But because of all the geopolitical turmoil, for example, tariffs, and then there was announcement about the USA trying to get ownership of Greenland. So those kind of events do spike up long-term yields, because it's seen as high-risk events, and if people want to buy them, they want to be paid a higher yield. So those kind of events in the world do affect bonds. Yeah. So again, the treasury spread is the difference between yields on deferring maturities, typically 2-year and 10-year treasury yields. And then, so the 10-year should be greater than the 2-year, but when there's high interest rates in the short term, that's when you get the yield curve going down. So when the yield spread between the 2-year and 10-year go into negative territory, then that signals a recession. Yeah. The Federal Reserve rate is basically the interest rate in the USA, and we can see from July 2022 till about 24, it's gone up quite dramatically, almost just over 5%. But in the last year or so, there has been an easing of the rate, so they've been cutting interest rates. So cutting of interest rates is generally good for crypto, because that means there's more liquidity in the system, and And also, it does stimulate the economy and makes for better conditions for crypto to thrive. However, at the same time, the interest rates cuts have decreased in the amount of cuts that have been taken place over the last year, because the Federal Reserve is a little bit nervous about the economy. So that also has an impact, because if it doesn't cut in the way that the market expects, then it creates a lot of nervousness in the general market trading community. So in terms of impact, right? So when the interest rates increase, so companies and individuals borrow less and also pay more on loans, giving them lesser disposable income. So bonds, money market accounts, and saving accounts have higher interest rates, making it attractive and risk-free for investors to put their money to work there rather than in high-risk investments like crypto. So the liquidity of money also decreases, and there's less flow of money into assets like crypto. So the Federal Reserve balance sheet, so this is in the USA, and the amounts are in trillions. So what happens is that the Federal Reserve will buy bonds and treasury bonds, and it will be on their balance sheet. And you can see in the financial crisis of 2008, the Federal Reserve and the central bank added $1.3 trillion to their balance sheet. And over the years, it's steadily increased. But notice during COVID-19, it increased by a whopping $4.8 trillion. So the balance sheet expanded rapidly because the U.S. government was trying to stimulate the economy and make sure that the economy was still going well in those difficult times. But we also see that in the last from 2022 to 2025, it has the Federal Reserve balance sheet has decreased in size. Now, in terms of crypto, if your Federal Reserve balance sheet is growing, if they purchasing treasury bonds, and if they printing money, then there's more liquidity in the system, and it's generally good for crypto. But at the moment, the balance sheet has been declining, but if the economy starts not performing well, then we may start seeing an increase in the balance sheet, which will, is generally a good thing for crypto. Yeah. The dollar index is also an important chart to look at. So the dollar index is a basket of currencies, and it's compared against the US dollar. So what this shows is that the dollar has been weakening for a little bit of time, right? So, and a weaker dollar is, has many areas of impact, and it's generally good for crypto, because a stronger dollar does mean that crypto price doesn't really go up as much. So with the dollar index, we need to keep an eye on it, because it has such a major impact, and also many times it's seen as a safe haven asset for investors, and people will put their money into dollars if everything goes really risky in the markets. However, in the last year or so, gold has also captured the limelight. It's gone to a figure of 5,000 US dollars in price, and that has been a really rapid escalation in price. It has come down in the last couple of weeks, but nevertheless, there's been an increase in activity on central bank buying, and this is all in response to the risk around the world, tariff rate increases, the aggressive U.S. policies, etc., especially on Greenland and tariffs and those kind of activities. So central banks are buying more gold now. They're not keeping dollars so much as their reserve assets. So there's been a change, and we can see that gold is seen as a safe haven around the world, and many people thought that Bitcoin would be the digital gold, but gold by itself is still very strong as a safe haven asset. So those were macroeconomic indicators, but we're going to look a little bit more specifically at crypto, and especially Bitcoin, and mostly Bitcoin because that's the largest cap crypto, and generally what Bitcoin does, the rest of the altcoins follow in general terms. So we're going to look at a few things that happened on Bitcoin. So the first chart here is the long-term holders and short-term holders loss. Okay, so long-term holders are those people that have been holding Bitcoin for a year or longer, and short-term holders are lesser. So what happens is, as the price of Bitcoin declines, you can see from the pink areas that the short-term holders suddenly go underwater. And what happens, it creates a cascading effect, because as the price goes down and their losses mount, they tend to sell. The short-term holders tend to sell, right? And the long-term holders are not as badly affected because they probably bought at a very earlier and lower price. But nevertheless, if the price does go down quickly, then it does also impact your long-term holders as well. So at the moment, short-term holders, about 22% of them are, underwater, so to say. They are not currently in profit, and as that figure rises, it does have a cascading effect on the price going lower and lower. One of the important things that have happened over the last couple of years is that there are many companies, especially in the US, and that are keeping Bitcoin on their balance sheets. So these are known as digital asset treasuries, and the companies are basically known as having Bitcoin treasuries. And one of the major ones is Strategy, that's owned by Michael Saylor. But what this graph shows is that these companies have been accumulating Bitcoin on their balance sheets, but it's been more steady than dramatic. And they tend to buy the dips, and they don't really influence the price action. They more follow what's happening in the market. So if the price dips, they'll buy. If it's gone too high, they may sell a little bit. So it's very much, it's an important part of the market, but the impact on the actual price action is not as dramatic as one would have thought. Okay, because these are relatively few in number, but nevertheless they are growing in size. So there's different types of entities holding Bitcoin on their balance sheet. There's private companies, there's public companies, exchanges, governments. So even the US government is considering holding a Bitcoin as well. And then there's also El Salvador that is keeping Bitcoin as a reserve asset, and ETF holders, BlackRock, etc. So there's quite a variety of companies that are doing it. So exchange traded funds have become quite popular over the last year or so, especially with the new US legislation. So these are major investment companies like BlackRock and Grayscale, and they offer exchange traded funds where people can invest in Bitcoin but don't physically have to own Bitcoin. And again, you can see there's the green bars are showing inflows, the red bars showing outflows, but they pretty much follow what's happening in the market. So if the price is going up, you see green activity increasing as they flow into the market. As price goes down, you start seeing the outflow. So they react more to what's happening in the market rather than actually directing the market. So they do have an impact, but they kind of react to what's happening, and they try to protect their investors' funds. So exchange traded funds, so these are investors that don't want the trouble of creating wallets, storing keys, or buying from crypto exchanges. So way back in January, I think it was last year, the SEC approved the first ever spot Bitcoin ETFs, and this created large demand for Bitcoin from institutional ETFs. And then, so they are removing several times quantity of Bitcoin being issued, but at the same time, they tend to balance each other out, because some institutions are buying, some are selling, and it becomes like a balancing kind of act where they balance each other out and has a lesser impact on price action than what one might think. So the next important graph is the market value and realized value ratio. So this is from CryptoQuant, and what this shows is the market cap of Bitcoin is the current price multiplied by the coins in circulation, but the realized value is basically what taking into account the prices that people bought at times the amount of circulation. So it's different because your market cap is just taking your current price, where the realized value takes into account the different price points that Bitcoin, for example, was bought at. And when these two values start diverging, then you start seeing that the market is actually experiencing a little bit of trouble, because now the realized value is going down and people are not so much in profit anymore, and that escalates and cascades down, and more people start getting out of the market because they're no longer profitable. This particular graph is from a analyst called Rec Capital. So he's a very very thorough analyst, and he speaks a lot about Bitcoin cycles, especially the halving cycle, right? So halvings themselves have very particular stages that they that happen during a halving. So there's like a pre-halving rally, which is shown by the green area. Then there's a last pre-halving retrace, which is shown by a circle, and then there's reaccumulation, and then there's a post-halving upside. So that's like a very strong price action post-halving. However, in this particular year, which was meant to be the post-halving upside, it was very muted, because price only went up to $126,000, which was far less than many people predicted. I mean, I've seen predictions of people saying it may go to $200,000, and that never materialized. And a lot of that is due to the macroeconomic conditions. There's been tariff wars, there's been physical wars on between countries, and there's also been accumulation of gold, and those have all impacted crypto generally. However, if we look at the next graph, again from Rec Capital, he points to the 4-year cycle. So every 4 years, it does very similar kind of activities, right? So the first year is like the final upside, and then the second year it goes into a bearish phase where the price drops quite significantly. Then the third and fourth years is where it starts going up again. So in 2025, we have been in year one, which is the last upside for a while. So this year, 2026, will actually be more bearish. That means price will be maybe going down a little bit more. And we can see that we've seen Bitcoin drop to 75,000 in January already. And it'll probably dropped to about $60,000 and maybe slightly below $60,000 or slightly below before the year is up. And that's my opinion, but that's what I think will happen, because we will be approaching a more bearish cycle now. Yeah. When I look at something very technical about the markets, but it's important. I mean, a lot of it will be difficult to understand, but I'm just going to go through it briefly so that people have some understanding of market mechanisms. So in any market, and these are like exchanges, crypto exchanges, or even stock market exchanges, you have buyers and sellers, but between them you also have what's known as market makers, which mostly constitute large banks and financial institutions. So these market makers have a very important function in that they provide liquidity. In other words, they allow people to buy and sell because they provide them with the instruments which enables them to get what they want. And they also help keep the bid-ask spread as close as possible. Okay, so if you have good market makers, your bid-ask spread is very narrow. So, and that's also how they make their profit, the difference between what the seller wants and what the buyer is prepared to bid at. And they provide a very important mechanism in the marketplace for liquidity and also for ensuring stability in the market. But this also leads to something called gamma exposure. So gamma exposure measures how market makers react to movements in the underlying assets. So when we start looking at institutional players and large players in the market, they do a lot of options trading, and they do that because it allows them to hedge their exposure. So what that means is that they protect their investment by doing hedging activities, and that stops them from losing too much of money in case the price reverses. So market makers maintain what's known as delta neutral positions, and they continuously hedge the gamma exposure by buying or selling futures or spot to offset the delta of options they have sold or bought. So when price moves, option deltas change. So that change is known as gamma, and that forces dealers to continuously rebalance. So you have these forces working in the market, and you can see this graph from Glassnode, which talks about gamma exposure, and the large green areas are where prices will be pinned because of the market makers' dealings, and the red ones is where you have sudden escalations in prices because they're trying to sell as the market is selling, or they're trying to buy as the market is buying. So that gamma exposure explains a lot, and the whole mechanism behind market makers, dealers, and how they try to protect their investments is also a big reason why crypto prices seem to be getting pinned down into certain narrow ranges. And that's one of the reasons. There's many other things, as we spoke about the macroeconomic conditions, but these particular market mechanisms also contribute to that pinning effect, and also the sudden cascading slides down in prices or slides up in prices. Yeah. So this is another graph about open interest in the crypto market, and what we find is that there's a large amount of interest in the options market as well. So it's not just straight exchange trading anymore or futures. It's very much about the options market, which is getting larger and larger. So in terms of total crypto assets, okay, so Bitcoin is still the number one with 1.76 trillion. There's Ethereum, 358 billion or so. Tether is so that's a stable coin. So that's crypto that is backed by the US dollar, so it keeps the price and it's pegged 1-to-1 with the price of the US dollar. So that's 187 billion there. BNB has a token. It's also an exchange, and then XRP, which is used a lot for cross-border transactions, is 113 billion. USDC is also another stable coin. Again, it is pegged to the US dollar, 75 billion there. And Solana is a smart contract platform, 69 billion and growing quite nicely. When we compare that Bitcoin's growth to other areas of the market, it's actually surprising to find that it has really been a muted growth in 2025. So even something which like Ether, which is on the Ethereum network, has actually grown quicker than Bitcoin in the last couple of months. And even normal smart contract platforms and utilities as service, AI, they have grown quicker than Bitcoin, and it's due to the the macroeconomic conditions, and also because gold has also stolen a little bit of Bitcoin's thunder in the last year or so. So it has been a muted performance, and you can see it when comparing it across different sectors in finance. So President Trump has indicated that he's quite crypto friendly, and there's a number of things that have legislation that have been passed, like the Genius Act. So the Genius Act is all about stable coins and enforcing them into law in the US, and it makes it easier for an organization to run stable coins, and also for banks to actually have bank accounts of companies that are doing stablecoin activity. Then also tariffs have been a huge part of the new administration. So the tariffs have been put on to many European and Asian countries, and even though initially they have been quite aggressive, there have been deals made, so it is becoming better. But these tariffs do have a inflation impact, which could be felt in the future. The U.S. government also had a 43-day shutdown. I think it was October, and that was, it was quite difficult because there was no economic data coming out of the USA, and people didn't really know how the economy was working. Also, a lot of people couldn't work in the government as well, so had a major impact. And then also, President Trump has been quite vocal about how he sees the Federal Reserve and the interest rate cuts. So he's in favor of more and more interest cuts, whereas the Federal Reserve is being very cautious, and they're actually doing lesser interest rate cuts than originally anticipated. So there's been quite a bit of impact from the political front, and it has impacted crypto. Some good impacts like the Genius Act, but I think the Fed repricing, tariffs have been quite brutal for crypto prices. So in 2026, we see a few investing themes which we will go through very quickly. So the one is dollar debasement. So because the U.S. economy has rising debt, this will put pressure on the dollar as a store of value and safe haven asset. So the use of quantitative easing, printing of money, has eroded the value of the dollar, and it's forcing investors to seek other stores of value. So the debt and debasement issues will affect capital inflows into the US because other countries will decrease the amount of dollars they put into treasury bonds. So there's a real risk, but nevertheless, the US dollar is still very well recognized and valued around the world. So in terms of policy, the US government is doing more and more crypto policy. So they're removing limitation of TradFi to custody crypto assets. So this is traditional finance. They can now custody or keep safe crypto assets. And then they dropped investigations of lawsuits into leading crypto industry firms. They are in the process of creating a strategic Bitcoin reserve and US digital asset stockpile. They also dropped reputational risk from bank supervisory guidance. So this allows banks to now have as customers companies that deal in crypto. Then they're also allowing 401k plans, which is retirement plans, to offer crypto assets. They also passed the Genius Act, which is all the regulation on stable coins, which was limiting their growth. But now the Genius Act allows stable coins to be legal and used, and it's really increasing the growth of stable coins. So we move on to the stable coin growth. You can see there's increased dramatically in usage to about almost 250 billion. The biggest players are USDT and USDC. And so stable coins, they pegged 1-to-1 to the US dollar. And the advantage of that is that it gives you a very stable price. So this allows people to settle in stable coins. So if they do a crypto transactions, they can do the settlement in stable coins. Also, it allows, if people see that, for example, that the price of a certain crypto may drop and they have an investment in there, they can quickly take out the investment, put it in stable coins, and then rebuy once the price has settled. So it has many powerful uses. It's cheap and effective, and with the regulation coming in, it's becoming more regulated, and that's driving the growth of stable coins. There is one small concern from banks in that, with stable coins also offering interest rates, they are afraid that people will move from their normal deposits in banks to stable coins because of the higher growth, and that may create problems for traditional banks. But that type of problems have not materialized as yet, but it's just something that people have voiced concern over. And then when it comes to asset tokenization, so this is linking crypto to real world assets. So in the real world, you have huge investment in residential real estate, so like 288 trillion. There's also fixed income products, equities, derivatives, commercial real estate. So all these are high value in the financial system. But then tokens themselves are still quite small, but these are tokens that are linked to real world assets. One of the legislations that the US has come out with is that these kind of tokens are no longer seen as securities, and these provide a lot of leeway for people to now link real world assets to these tokens. So we may see a huge growth of this in the years to come. Also, decentralized finance, there should be an acceleration. So these are platforms that lend crypto, that allow people to borrow. So they put their crypto as collateral, and they can withdraw, for example, stable coins. So it's a way for people to make use of the crypto without having to sell it. All they have to do is repay the loan, and they can reclaim their crypto. So these are increasing in value. It's obviously with the macroeconomic conditions, it has affected all crypto, but DeFi is definitely still a major player in the crypto space. So you can see that there will be growing liquidity and interoperability with connections between different DeFi platforms, and it will position it as a creditable alternative to centralized finance. So more DeFi protocols will integrate, and lending platforms, decentralized exchanges, and infrastructure will all benefit. So lastly, we'll speak about staking. So staking is when people can put their crypto into almost like a vault, and that's kept by the crypto provider. So this is used for proof of stake mechanisms, and it allows that particular type of crypto to safely manage the network by having these staked coins in the system. So there were two key policy changes that were made in the USA. The first was that staking activities do not constitute securities transactions, so they're no longer seen as securities, which removes a lot of regulation around them. And then the second was the taxman and treasury, that the investment trusts may stake digital assets, so they're allowed to do that now. So those have made significant impact on staking and accessibility to various organizations and people to actually do staking activities. So that was basically the end of my presentation. We can see that there's been a lot of macroeconomic activity that have kept the crypto market, all from various tariffs, wars, and indicators like inflation and economies and interest rates. And in 2026, the economic environment is not going to be any easier, and it's more than likely that the Bitcoin price action will be very depressed. But I think in the years after that, we will see a recovery. But for the short term, very muted price action and very difficult economic conditions. So that was my presentation. I hope everyone enjoyed it. And I think it's time for some Q&A if there are some questions. Okay, I'm just taking a look now. So there is a question from Tawan Manhatma, and it says Bitcoin was around 84,000 Friday. It dropped to 77,900 Saturday, down by 7% in October, peaked at 126,000. Investors then pulled back on uncertainty over Federal Reserve's path on interest. Ethereum, BNB, XRP, and Solana fell at least by 10%, according to CoinDesk. Will Bitcoin get a new life? How will investors not pull out from riskier assets and shift investments? Yeah, that is a great observation. Obviously, with the gold price, that has given people somewhere to put their money, and also, as said, the macroeconomic conditions are not favoring Bitcoin at the moment. But I think in the long term, Bitcoin will recover for a couple of reasons. The one is that, so I think the Federal Reserve will start increasing the balance sheet as more and more economic indicators start coming out, showing that maybe the US economy needs some stimulation. The second reason is that, Bitcoin, there's a lot of long-term holders in Bitcoin that see it, as a store of value, and they do generally keep, Bitcoin at a certain value. And then also with the injection of funds from ETFs and other treasury companies, they all have interest in keeping the price more stable. So even though Bitcoin may not have the volatility and price acceleration that it had in the past, I do believe that there will be steady growth, and it will be a form of investment that can be relied upon in the years ahead. So I don't think investors will pull out, because especially Bitcoin is a very large asset class, and it's seen as a very credible investment opportunity. And again, gold has performed very well, but I think it's, gold is really good when there's high risk events in the world, but that doesn't always happen. Also, once US policy starts settling down, you'll see there's a lot less nervousness in the global economy, and hopefully there will be resolution of the conflicts in Ukraine and Russia, and lesser aggression. So those will all contribute to a more stable global economy. So I hope that answered the question. Are there any more? I just saw that one. So I think, Calvin, that's all the questions. So hopefully everyone enjoyed the presentation, and it was gave them a bit more knowledge.
Yes. So that's all the questions that were in the Q&A. So if there's no any questions, you can close, John. It's all right. Thanks for everyone for attending this evening. I hope you continue having a great evening further. Thank you.
Thank you, everybody. Have a great evening. Bye-bye.
Bye.